Turnaround Tuesday, Eagles. How's everyone doing today? I have a great guest. For those of you who have ever been interested in point and figure, my guest today, Krishna Kumar from India, does use point and figure. I remember the old days on the floor. Guys would stand on the side of the pit with their X's and O's and give signals to their partners in the pit to take advantage of reversals. So it's kind of a lost art. It's mainly old timers use point and figure. So you're going to be exposed to something that you may want to take advantage of and add to your trading arsenal. Everyone doing okay today? So Blake warned that the dollar could come off with all the news we have going today. Still a higher low, might be the second higher low. And when I look at the euro, it makes me think that we should challenge these highs, but it's really a tough call for me. I would know what to do at new highs. I suppose if you want to hear the ice crack, you could go ahead and put on some longs, but what I'm thinking is maybe the Fed statement is benign. We'll see. But my bias is to buy one more new low. There's a 61.8 at 88.32. But, you know, sometimes I wait for one more jiggle. Have you guys ever done that? One more high, one more low. When you're right about a low, you know, several days ago, and you think it could happen again, and it never gives people another opportunity. What makes me think it could happen in the dollar is based upon my RSI work that although we diverge on the 1 hour TF, we did not in the 4. So this time, if we did it and made a new low, washed out stops one more time, I believe that the RSI would hold over 30. So that's kind of the setup I'm looking for with all the news events, with, you know, the State of the Union and the Fed, and then we have NFP Friday. So, you know, it's a week to tread a little bit lightly. We have risk off again in the S&Ps, and we're almost at one time 40 handles off the high. I think the tell, and I talked about it in here, was even though the S&Ps were blowing off for the last few weeks, the VIX was not making new lows. There's the VIX. And if you look at the weekly, we're right on the verge of breaking out here, okay? So I know there have been many false signals in the VIX before, but I think this one's going to have some legs. And if you didn't buy the bottom in the VIX, it doesn't mean that you're late. It could be just beginning. I have some speed lines all the way up in the 40s. So we'll see. Perhaps a weak dollar can create a turnaround Tuesday for the S&Ps, and maybe we get one more rally into Wednesday, because here again, the S&Ps did confirm. Although, you know, I did want to bring up one point about my theory about relative strength, that markets rarely peak when the momentum is confirming price highs. Here's an example of it not working. Okay, let me go to the month. Where's the start here? On EG. No, it's further back. So let's go to the month. See this high? And that's what always kept me bullish. But look at what happened in the meantime. See that? That was a confirmed high on the monthly up there. Big reading at 84. Everyone said it? Everyone see it? Okay, so that was a confirmed high. Maybe eventually we're going to go for it, but if you are working under the assumption that you have a confirmed high, there should be another high. It's been, let's see, since 2008. So a decade later, you're waiting for the confirmed high to be taken out. So there's always exceptions to the rule. Give me a Y if you're with me. Okay, well, you see price making a new high here, and you see the RSI making a new high here. that's a confirmed high. All right, and markets rarely peak. The probability of having a peak with a confirmed high or having a low end with a confirmed low is low and high for if it confirms a high. Okay, so just a couple of things I wanted to bring up. Also, you know, we are going to win the election at FX Street for best new contributor. I think we could even take the new out and just call it best contributor. Anyone agree with me? Come on. When have you seen so much talent in one spot every day and free? Free to boot. So get out there and vote, because I know the partners want to hang that over the shingle on the website that we won the award. Okay, so support ForexAnalytix. It doesn't cost you anything to vote. It's kind of like a tweet. Tweets don't cost anything, but man, I think some people think it's worth $1 million. Anyway, so we'll see what happens. Dollar's starting to come back a little bit here. Euro's underperforming. Let me just look at Aussie here, because I was looking for some type of high to come in, maybe up around 82. Yeah, you know, Aussie, I would wait for the third drive up here towards 81.5 to 82, and I think it's going to be a good short if it sets up there. Okay, that's a 4 hour. There's a 1 hour. So it looks like we already have two. Maybe we pull back and blow off one more time in Aussie. And I think you could go for it, because on a longer term basis, I know it looks great there. I know it looks pretty good here. We're cleaning out all of these longs right here, okay? So anyone who's been bearish Aussie is, you know, they've been feeling pressure for a long time. And may I add that at the major trend line, Blake called it down here. But you guys are used to that. So I'm thinking 81.5, 82 could be a decent short here. Although 84 is 38% back. The short-term stuff says wait for one more high. Make sure the RSI, you know, it's not only the price, it's how it gets there. So see what the reading is at 81.50 to 82. And if we're under this peak right here, you're going to have a nice divergence. Okay, so we've already diverged once. This was a confirmed high. Pulled back, rallied, diverged, pulling back. Like to see one more rally, and I think you have a nice three driver. And probably a pretty crowded trade by now. The Aussie's been advancing for a long time. Plus, you know, gold bulls and precious metal people are also, you know, Aussie bulls. So we have a great guest. We have a great team. And I'm going to hand it over to Blake Morrow, who I interviewed several times on FX Street, and said to myself, man, you know, we would be a pretty good team. I'd like to work with that guy. So be careful what you wish for. Blake, how are you?
Good morning, Dale. How are you?
Hey, buddy. No, I did. I thought about it. God, it'd be fun to work with a guy like, you know, Blake, and then interviewed Nick, and it all manifested. So, you know, what we think about in our minds, if we, you know, can see it, you know, it's just like that book, Think and Grow Rich, Napoleon Hill. So the thoughts you put in your head, what a man thinketh, right?
That's right. Although I keep looking at Lamborghinis, and it only hasn't appeared yet. It's weird. I've been trying that. I've been trying that trick. No, I'm just kidding. I would, you know.
Wife would, you're not a flasher, buddy.
No,
yeah.
I mean, I enjoy a nice vehicle, but there's so many of them running around town. A, there's so many of them running around where I live, but B, you have to have really serious money to have something like that. I mean, like when I'm talking about serious money, I mean, you know, you take your car and it gets serviced, and you're walking out with a $10,000 bill. You know, it's ridiculous. It's not you have to be literally, you know, worth hundreds.
Elliot told the story, Blake. He got one with a bonus check when he was at a bank, and he didn't have the money for the auto insurance.
Yeah, he had a Ferrari or whatever, and yeah, I mean, it's just, but that's I mean,
it was a garage queen.
Yeah, I've had a couple of Porsches, and that's about the extent of once my kids leave, then I'll probably revisit that again. You know, it just doesn't make sense.
You're almost due for your midlife crisis. That's something to look forward to. Buddy.
Something to look forward to is right. It's right. Although I would argue that many of my friends have entered into that midlife crisis already. So I have to explain. I'm like, guys, you're probably going to live longer than your ancestors. So your midlife crisis, you might want to stretch that out just a bit. Anyway,
like, you think Euro has enough juice with the news coming up here in the next 48 hours to make a push to new highs?
You know, I'm not sold on the idea. You know, and I got up this morning, and I mean, I was seriously half asleep. I was joking with everybody, and you know, I sold the euro at 38 right here, and I closed it at 28. Just took 10 pips off of it. I was kind of like half asleep scalping, and just because it was at a 50% retracement, I'm like, you know, and it looked like it just took out those highs and was reversing. So
it's hard to think position trading with all of this noise coming up here. Union, Fed, and then NFP. I mean, it's that kind of week where you know, you have to tread lightly, don't you think?
Yeah. Well, okay. So first of all, let's talk a little bit about about what's happening over the course of the next 24 to 48 hours. So first and foremost, there's a lot of there's apparently a lot of dollar selling scheduled for the end of month. Like there's a ton of dollars to be sold. Now, could you argue that a lot of this move is happening right now ahead of, you know, month end dollar selling? And I would argue that, yeah, I think a lot of it's starting to get done. The other issue is we have the State of the Union tonight, and I believe, if I'm not mistaken, let me see if I have it in one of my chats here. It is at, or I have an email or something. I believe it's at 8 o'clock tonight. State of the Union. I believe it's
Eastern.
8 o'clock Eastern. So I think, you know, I'd have to double check that, and somebody might be able to confirm that, because I'm you know, focused on the chart versus any timelines at this moment.
I could see you watching it, clicking with your, you know, phone.
You're right.
You're watching it.
So we have State of the Union tonight. Now, the thing about Donald Trump is he will probably talk accomplishments, but he may discuss agenda on what he's looking towards next. And if he starts talking about infrastructure spending, which he's constantly talked about, our, you know, roads and our airports and our, you know, we dilapidated this, and, you know, crappy airports and third world airports, and, you know, he may really start to discuss infrastructure spending. And if he does, the dollar might get a boost as a result. Now, I've also read several reports from banks this morning that are like, okay, if we see any dollar buying, we're going to sell into strength. They're already talking about that in the event that we get some dollar buying tonight. So, and you know, technically, you look at the euro, and I'm just going to tell you what I did last night. I put in a bid on the euro dollar at 123.20. I thought we would break new lows. This is what I thought we would do. I thought we'd break new lows and then bounce. So I thought we would come down here, break new lows, and then bounce off of this trend line. Unfortunately, we didn't. We actually matched that low and bounced. And so it missed my entry order by, I don't know, 15 pips or 12 pips or something, which I'm obviously a little irritated. This morning I got up, I'm like, oh, did I get hit? You know, and then I looked at I looked at the lows and I'm like, damn it, I didn't get triggered. So anyway, but this trend line here is going to be really important. It's going to be really important going into tonight. So if we see any dollar strength and you see the euro, come back down towards 123.50, 123.30, it's going to be important that we hold, because if we don't, then that means there's something bigger going on. Now, when you think about what can happen again in the next 24 hours, we're talking, the State of the Union. Then tomorrow we have the FOMC, and the FOMC, even though it is Janet Yellen's last meeting, she might help set the stage for Jerome Powell, who's coming in as the new Fed chair. Now, if the Fed ups inflation forecasts, which is not, I don't think I don't think it would be, I think it's possible that they do, or they hike, growth forecasts. The dollar could really get a bounce as a result. I mean, you got central banks, other central banks, like I was reading a piece from I'm on like Barclays and Citigroup and JP Morgan, and I got all these chats going with all these analysts that are constantly yammering away. And one of the guys we're talking about, one of the banks we're talking about yesterday, about the timeline for the ECB doesn't really match up as far as looking to end their bond purchases, and then when are they going to really start raising rates, and when is it feasible? And they were alluding to the fact that maybe the ECB, everybody's assuming too much out of the ECB and too less out of the Fed. But if we walk away from tomorrow's FOMC meeting and we've already got 3 hikes for 2018 priced in, and I was on a Goldman call was it last month, or maybe it's the beginning of this month? I can't remember if it was like a month ago. It might have been actually about a month ago, like at the end of December. I was on a Goldman call, and they were talking about that their expected they expect 4 rate hikes from the Fed in 2018, and if the market adjusts to that timeline tomorrow, they go, oh wait, 3 rate hikes is not appropriate. We're looking at more like 4 rate hikes going into 2018. The dollar could actually get more of a sustained bounce, and that's that to me. That's why I think this trend line is so very important, because if this is broken, then technically we're looking at a move back down towards 121, and 121 is this is ultimately the for me, this is the big kahuna. If we get down here, this is where I really want to be a buyer of the euro or seller of the dollar. That's kind of like my hope we get down there, wish it, and it may be so, Dale. That's kind of the price I'm hoping to get. I just don't know. If
I paint scenarios in my mind all the time, and what? That's a good exercise, because when they do happen, you're prepped. You're not thinking about it. It's automatic pilot.
Exactly, and that's what I'm what I'm hoping for over the course of the next couple of weeks, is that the dollar gets a more meaningful bounce, which will allow us to sell it at better prices. Like I said, I've said this since last year, I don't think the dollar's move lower is going to be a straight shot. We've had a pretty big dollar decline in recent weeks, and
60.91 should be a pretty important level. That's the way it looks to me. If it goes back above 91, there's something else happening.
Yeah, exactly. I would 100% agree with you. The dollar index here, this is the breakdown point, and that's really the big, big level. Should the dollar see some sort of significant bounce, that's where the dynamics really change, and I wholeheartedly agree with you on that analysis. And the question is, how high can we go if we do break that? But that's neither here nor there. We're not anywhere near it, and it's not something that we should even be fathoming at the moment, because it's not even a thought right at this moment. Right at this moment, the dollar is just trying to get out of its own way and trying to make some sort of little recovery. We need to get above 89.50 intraday for the dollar to have more sustained bounce. But that's why I go over to the euro dollar, and as long as the euro dollar remains above this green trend line, there's really not much to say about the dollar other than it's weak, and we should probably continue to sell dollars on any rally. The dollar was hit really hard overnight, and we saw a little bit of selling, and I'm going to point out that the S&P broke out of its January, or its 2018 up channel, and I'm going to revisit these prices because I want you to see exactly what has happened, and I'm going to talk about it slowly once again. Is the S&P reached a very big target on Friday, and this is the reason why I always mark these type of prices, because we had a flash crash.
You called that on that formation before it did what it did Friday.
Yeah, we talked about it Friday or Thursday of last week, yeah. and does that mean that the S&P is going to decisively turn lower? Gosh, the dollar is such a piece of garbage. It's just getting crushed right now. Unbelievable. Actually, I shouldn't say unbelievable. It's not really unbelievable, is it? The S&P though has popped out of this channel. Okay, so we should note that it's popped out of this channel. We found support in the support zone. This is all these lows that have been from last week, and you can see all these lows through here. So as long as those lows continue to hold, we have to imagine that the S&P is is going to stay bid. But if we break through the support, I think that's going to expose a little bit bigger of a pullback in the stock market. So I think that you guys should be paying pretty close attention to that. How we trade that in the FX market is still unclear. We don't see very many down days in the stock market. So understanding how to translate that to FX is still, like I said, it's a bit of an unknown. My assumption would be that the yen stays relatively strong, but the question is, does the dollar catch a bid as a result if we see a little bit of stock market selling? I was talking to another trader this morning over the phone, and we were talking about, well, what would be a catalyst that drives the dollar? We were both like, well, we saw some selling overnight in stocks, in equities. You can see the S&P came down, but the dollar didn't respond. And in my experience, in order for the dollar to catch a bid from like a risk aversion standpoint, we have to see a little bit more selling than just just this. We have to see a little bit more of a scare selling. Like if the market looks at stocks and they go, okay, this is not your typical in this market 0.5% correction. We're actually seeing a little bit bigger correction now. Then at that point, I think that's when the market starts to go, okay, let's start buying some dollars, and I'm going to shift back over to dollars for safekeeping, if you will. But we have to see more aggressive selling rather than just kind of a bleed lower. That this type of selling doesn't scare anybody. It's the bigger sell-offs that will catch traders' attention, and this isn't it by any stretch of the means. So anyway, but we should watch the S&P. I think the S&P is vulnerable at this point for a little bit deeper of a pullback. And considering the fact that just if you take just this year, all right, just this year, the S&P has traveled almost 8% higher just in the first month, and that's a pretty outstanding move in the S&P. That most people most people would be happy with that annually. So to do 8% in 1 month is like pretty unheard of. B, that's got to start making you wonder, how sustainable are these moves? And that's why I think we have to be, a little careful with the stock market up at these prices. In my opinion, I mean, can we still have a blow off top in the market and, ratchet up another 20%? Sure. I mean, it can happen. I just think if we're not going to get a blow off top, then we're probably going to be, range bound for a while. And so that's something that I think we all need to pay a little attention to. As far as the cable's had some volatility. I'm really not too sure what to do with the pound. The Aussie respected channel support overnight. We're struggling as we are getting back up towards 81 cents, but as we've been kind of bouncing around the last week around here. But I think this the support here is going to be very important to be watching, and we almost test support overnight. The Kiwi Dollar is starting to show signs of weakness. Now remember, New Zealand's data last week was really bad. Rebalance numbers overnight came in a little bit better than expected, but overall the data out in New Zealand is starting to sour a little bit. So I think you're seeing it in the price action. Dollar Canadian, very whippy, but dollar Canadian, the NAFTA negotiations this round are over now, and they say they're making progress. Which if they're making progress regarding NAFTA, that's actually bullish the Canadian. So the Canadian, spiked around yesterday, but we came off and then we rallied overnight. You could see the dollar Canadian rallied overnight when the S&P aggressively sold off, and that's something to pay attention to, because that's telling you, even though we came right back down again, that's telling you that if we do get a little risk aversion, if the market sees a little bit of stock market selling, the market in the FX market might be more prone to selling commodity currencies and emerging market currencies. Look at the US dollar Mexican peso, did the same thing. Stocks were let me get off this really quick.
Progress for this administration is not having a Twitter argument with an organization or a person. So I mean, looking at nothing's getting done, but we're making progress. I'm skeptical. I'm skeptical about. I think it's part of just his nature to walk away from things and let people think he's ready to walk, and that's how he gets what he wants. And
I would hate to be. I would hate to be a car salesman and have Donald Trump walk in and try to buy a car from me. I'd be like, oh my god.
Yeah, I know a guy here. He buys it under dealer costs, and all the car salesmen run away when they see him walk on the lot.
Oh my god! Because you're not going to make any money.
He's the same with his brokers. He doesn't like to pay a commission. I said, what's wrong with other people making a living besides you, buddy?
Right. People gotta make. And
he's a multi-millionaire, Blake. Anyway,
Well, that's why, because of his frugality, I guess. So Steve is going to be here today. I'm gonna let him do a little bit of talking, but I'm also going to stay on the line for the next 30 minutes as well, because I know I want to be able to chime in a little bit. His throat isn't feeling too good, and so I want to be able to be here to chime in on certain things that he's talking about. This way, he doesn't have to do all the talking. Steve, are you here this morning?
Hey Blake, by the way, do you remember the old correlation USD CAD and the VIX?
Yeah. And the VIX is actually showing some signs of life. And it's
the VIX has been diverging from what the SPX is doing for quite a significant time now. It's been what, a couple of weeks?
Roughly. Yeah. We showed that chart a few weeks ago. There was a red dotted line every time the VIX started going up.
Yeah, you remember that we showed that.
I remember everything except our passwords.
Yeah, that chart. Blake can show it as well since he has the screen. I just put it on Skype for you, Blake. These are all the occasions that we've had VIX diverging. I mean, VIX's correlation with the SPX going to positive in the recent past, and in essence, as you see in the vast majority of the cases, we at least had some type of a correction, right?
Yeah. Sure. I mean, and it feels that way with volatility starting to pick up. I think this is where, you know, you start getting in the 16 range, and that's when people are really going to start to perk up and go, hey, wait, does this volatility matter again? You know, are we paying attention to that again? And
if it's a wedge, it looks like it should go to where Steve anchored it, up there around 32.
Well, you know, Steve, I'm gonna actually pass you the charts because I want you to be able to show what you're thinking, but I'm gonna be here to commentary on those things. So,
and I'm gonna shut up for a while.
Welcome. What? Dale, shut up. Get out of here.
Wait, I mute myself. It's the only way I could shut up. Okay,
you're here to be the opposite of muted, actually.
Right.
Okay. But by the way, I don't know if you mentioned it because I had a fast meeting that I had to attend. It happened, but it seems that you know, the pound and the euro depends on what happens now, of course, during the next few hours. But they seem to be, in a sense, bull flagging or independent. So I don't know what happens from here, but definitely the signs for the dollar are not good at the moment.
No, they're not. I'm more concerned right now with you know, what happens. I don't think this is technically, we could make arguments technically of what we think is going to happen, but I think the overarching you know, the State of the Union tonight and the Fed meeting tomorrow are really going to be the market movers, regardless of what we're seeing, you know. And because I think because you know, remember, I mean, you're talking the State of the Union and the President of the United States, which is a wild card. You know,
indeed.
But by every
there is speculation about Trump communicating some type of fiscal expansion. Was that a conversation?
Yeah, I mean, you could, you know, possibly talk about, you know, infrastructure spending might be something that he touches upon, which, you know, all of this, whatever he says, if he says spend, you know, we're going to spend, that's all inflationary. And one of the things that we should be looking at this week, and this is why I think the Fed has to be really quite cautious and potential of an upside, you know, overheat of the market is, you know, you got, if you start to see, like we have, hold on, let me find the data. It's an employment, the employment cost index. I believe ECI is this week. Let me figure out when that is. ECI is at, employment cost index is it Thursday? Yeah, so we're gonna get like the ECI on yeah, we're gonna get average hourly earnings obviously on Friday, but I believe the ECI is coming out on Thursday. But regardless, we start to see a tick up of inflation, and that's going to spook. It could spook stocks a little bit, but people are going to start to think that the U.S. economy is starting to get really hot, and the Fed's going to have to do something about it by raising rates a little bit more aggressively. And so I think that's the risk for dollar shorts.
Don't you think that also a big risk is that stocks sooner rather than later are going to start getting spooked by the rapid increase in yields? Because, you know, that's probably the elephant in the room, right? I mean,
right. Yeah. I mean, we got yields that are, you know, flying right now, and bonds that are just dumping, and the dollar has been absolutely unresponsive to yields. Absolutely. And does that dynamic change here, you know, soon? I don't know. But it's weird to see, you know, yields continue to rally and the dollar just underperform. So,
and we also have the last speculation, which in my opinion has a very high chance of being true, is that Yellen on her last speech on the way out, she's going to be a lot more hawkish than she would otherwise be, because, you know, she's now passing on the baton. It's easier for her to recognize that there are several issues that are more or less worrying, like, for example, you know, stock prices, asset valuations, etc., etc. So she might, try living back as a legacy to communicate that she started normalizing monetary policy, and that she thinks that that should probably accelerate given the current circumstances, and that might also spook the markets.
It could, because I mean, she doesn't want to be the looked back on in her legacy, if you will, that people look back and go, why didn't she say something on her way out? She didn't see it? Like, how come Greenspan didn't see the housing market crisis coming? When he passed it to Bernanke, why how did he make this mess and not even see it? And so I think that's possible. I mean, if she learns from her predecessors' mistakes, that would be one thing that she might do, and that's why I think that she is going to try to set the stage for Jerome Powell and make sure she lets everybody know that the economy is running hot, and if the FOMC has to raise rates faster than had anticipated, I think this is where she's going to say that. And like I said, I was saying this earlier, Stephen, you might not have been listening, but I was listening to a Goldman call at the end of the year, like the end of December or beginning of January.
You said that they actually believe about that we might have 4 rate hikes. You know something?
Yeah, that's their base case, actually.
Yeah, I believe the same thing. I believe that the Fed is not going to openly recognize that thing with asset valuations and stocks is getting completely out of hand. Because that on itself, if they make an explicit, strong mention about it, can cause some kind of a semi-panic, let's say, and might work counterintuitive. But I do believe that regardless of if they make a strong mention about it or not, I do believe that regardless of everything else, they must be seriously worried about the activity that we've been seeing in the stock markets, because this has all the elements of a mania phase.
Yeah, sure, it sure does. Brian said, hey, Gary Cohen on CNBC this morning said he's going to talk about 1.5 trillion in infrastructure spending. So there we go. If he's talking spend, it's all inflationary. It is all inflationary here in the U.S. And the Fed's going to have to try to counter that with higher rates. And again, these are the things that over the next couple of days could turn the dollar sharply higher for a bounce. Now, you look at the dollar, structure, and it looks bearish, right?
Yeah, it looks very bad. It does. Very bad.
But when you're in a bear market, in any asset, it doesn't matter what asset it is, dollar, stocks, gold, doesn't matter. You get these breathtaking short squeezes that are convincingly, they look like a low has been put in, even though a low hasn't been put in. There is a high possibility that over the course of the next 24 hours, 48 hours,
we're going to get that catalyst.
We could get, and the market goes, oh my God, and the dollar squeezes to, let's say, 91, and everybody goes, oh, the bottom's in, and then then the dollar just falls apart again. But the sharp corrections in bear markets are very normal, and the dollar,
and as you said, brutal, very very often brutal.
They can be very brutal. So that's just something to think about.
By the way, in my opinion, if we see any conversations about fiscal expansion, etc., so what, for example, Gary Cohn mentioned on CNBC that our friend Brian is telling us, in my opinion, as you very well said, through the mechanism of expectations for inflationary pressures and the economy overheating and rate rises due to all that, I think that in the short to medium term, the effect of that will definitely be dollar bullish, but there is absolutely no question about it that anything that affects the US deficit is on the long term dollar bearish, right? There's no question about it. So Of course, it's contradictory, but in the short to medium term, the effects, will be completely different. But keep in mind that sooner or later, the fact that the US is running the deficits that it does, and if it looks like that the deficits can really, get out of hand, that's definitely going to push the dollar even lower in the long term. So
Right.
if we're looking at the long-term dollar trend, anything like that will probably add a lot of credibility to the theory that the dollar on the longer term might have a lot more to move to the downside. But as I said, that's to the long term, nothing to do with short-term moves or even medium-term moves like within a few months or whatever. I'm
Right.
just saying that for people to keep that in mind.
Sure. So, hey, I got to mention something really quick. Abdul asked about, some sort of company that, I'm not even going to mention the name, that what they do and who they are, and I have no idea who they are, but I'll tell you this. This is the ForexAnalytix webinar. It's free. All right. But our company does make money based on a subscription service that offers you technology and analysis, and in my opinion, the best in the business. So if there's any company that might be like a competing product to ForexAnalytix, it's not going to be discussed here. I mean, it's just not. And I have no idea who that company is. But hopefully you like what we do. So there you go. Okay. And like I said, in the name you mentioned, I'm like, I have no idea who that company is, nor do I care really. I care about people in our community, and that's it. Steve, so now stocks are obviously under a little bit of pressure right now. How do you feel about the S&P right now?
We are seeing some first signals of at least, for example, this very steep ascending channel that we have been following since the first trading day of the month. Today is finally breaking to the downside. Of course, breaking such a steep, narrow channel at some point is an inevitable, thing. It's going to happen sooner or later. They are extremely stretched in any kind of metric. I mean, they're insanely stretched. But honestly, that hasn't said much all year long, right? I do think, though, that if we get any of the events that you mentioned before, that a lot of them can prove risk negative in the short term, we can see like a very sharp move to the downside, like 2-3% happening within a couple of days easily. Given the fact also that a lot of people will be like, okay, this was an excellent ride, time for me to take some profits and rebuy lower. Right. So I do think that the potential of a sharp move counter trend, as you mentioned with the dollar, is also here in the stocks. And if you see, this is the SPX. We are poking below the channel. This is the Dow Jones. I have been monitoring this for the past few days as a potential ascending wedge. And keep in mind, this is the 2618, the 261.8% fib extension of the last bear market that we had, of the Great Recession bear market. So it's also,
really?
Yeah. So it's also a very, very nice fib level here. We almost touched it. We came like, what was it, 50 handles away from it, something like that. So I'm also monitoring Dow Jones here. Dow Jones yesterday, for example, we were looking at it, had a weekly RSI above 92, and I was telling people here that that's something that, in my market experience, I remember having seen in such a time frame only in Bitcoin. I don't remember having seen it in any other asset class. I don't know if you remember a weekly at 92 RSI in anything you've been trading in the past. I personally don't.
I mean, it's very rare, very rare. Yeah. So it's
Nasdaq as well. Potential ascending wedges in the Nasdaq as well, poking below it as we speak. IWM, also a potential ascending wedge. It's a little bit further away from support. So, VIX, as we showed before, very seriously diverging since the very beginning of the year. So since the very beginning of the year, we've seen a mad rally, but on the other hand, implied volatility tells us a completely different story. So I think all the elements of a sharp correction lower are here. I'm not implying that we're going to find a top, but as you said about the dollar, I think that like a strong correction can easily come within this week, given all the event risk that's upcoming. So I think that people should be really careful if they're long. I would personally have booked profits.
A couple of questions. Abdul asks, hey, I'm an active trader in the Asian markets out of my Hong Kong account. It looks like Asian equities might correct more next week or two as it has begun yesterday and today. Could it be cyclical because of mainland China taking profits to spend for their Chinese New Year celebration? How will it affect yen pairs this week and next? Apologies if the question seems complex. While you pull up maybe like you know, the Shanghai composite, which is the SHCOMP, Steve, if you haven't looked at it. Any type of equity.
By the way, look
Okay.
at it. It was
Okay.
it was in a great channel here. We were looking at it back then, and yeah, I do think that you know, as you see, we've had like a huge rally here as well. But you know, it looks like correcting. But I think, I don't know if you disagree, Blake. Unless we pass below that peak there, you know, there is no real bearish scenario to talk about, right?
Right. I mean, but if it should start, and if we do see some selling in the Asian markets, you're probably going to see yen buying as a result, and that'd be true for probably any of these. If the stock markets actually start some sort of, you know, near-term correction, and you know, when we talk about a correction, you know, what is a correction? You know, maybe 5, 8, maybe 10% in this environment, since you know, we've had such really strong moves over the last, you know, 12 months. Then, you know, we see some sort of correction like that, yeah, you're probably going to see some yen strength as a result.
Absolutely. But by the way, this is also the Nikkei. I also think that, you know, any retest of this 23,000 breakout point is absolutely healthy. Now, to be looking for also coincides more or less with this ascending trend line, 50 DMA here as well. So in my opinion, we need a break of this area that I'm going to mark here, this one, to start being a little bit more optimistic about a deeper correction, like towards any of the trend lines that we see there. If we zoom out, we can see here the trend lines. I don't know if you agree on that, Blake, but
Yeah,
this is what I see. I think we need to break below there to actually look lower, right?
Right. We will. Is Stelios in the house?
I think he is.
I am, yes.
Okay. As you know, Stel, you know, we have these guys, these micro guys here, right here, with Blake and Steve, and it's good stuff. But you know what? You're our Galileo, and we're talking big picture stuff here. And you're great with your telescope. And Steve, I don't believe Galileo was Greek. So
You're right on that.
okay, so you know, where's your head at? You were looking for this break in the dollar. Do you think that we should be looking to accumulate the dollar, or are you becoming longer term negative? Macro.
Good question. I was starting to become negative the dollar. Remember, I was looking at my usual monthly DXY chart, which broke, and
Right.
we were talking about this months ago. I've been negative the dollar for some time. The only problem I'm seeing now is something we discussed a few days back on this webinar, is that we are seeing a very fast depreciation of the dollar that will bring inflationary pressures. And the problem, not the problem, but the only issue with the US economy so far, for them not to hike faster, has been inflation, and it's been below target, 1.5%, whatever is the last
Good point.
reading. So that, in my opinion, will start creeping higher quickly, as it did with sterling after the Brexit referendum result and depreciation of the currency. So when that starts ticking up, the Fed is just not going to step off the gas, I think. I have been a little bit worried about the Fed and what the market has been projecting in terms of rate hikes for 2018, 2019. I had been saying for some time, I think we might get disappointed by the Fed. They might not hike, 3 times or whatever it is every year. Now with this dollar move being so sharp and so fast, I'm starting to think that there is a good chance.
If you remember, we were having this conversation together, and we were both doubting that the Fed is going to hike 3 times. But
yes.
That's exactly the point.
How about Powell being the new Fed chair, wanting to make a statement early that he's different?
I think we first need to hear him a couple of times before we can make more. Before we can have a stronger opinion about that. But to finish what I was saying, Stelio, I've also changed my mind, and I've said it some time ago, because really, with the dollar having depreciated so much, I think that the three rate hikes and seeing also the move we've been seeing in stocks and assets, I think that 3 rate hikes can easily come this year, can very easily come this year.
They're becoming the base case scenario now.
I
used to think 2, and that with a question mark, but now I think 3 is the base case. And as for Summers, theoretically he's very similar to Yellen, but again we have to wait and see what he says and what he's like. So
Powell.
Sorry, Powell. What did I say? Summers.
Sorry.
Summers. He lost. Yeah. No, Powell. Yeah, sorry about that. So we have to wait and see for that. So, but yeah, I'm a little bit worried, not worried, but I think I am changing my mind, and I have changed it a little while ago, that I think the dollar might start, the Fed might start, moving a little bit faster. So the dollar might find support here. Just my, just my 2 cents. It's difficult to gauge, but I do think that inflation is going to start picking up, and we have seen that this is something that happens quickly.
It does. It does, Stelios, and actually one of the guys that I was chatting to this morning, he is just like, he talked about it a couple months ago. He goes, the thing that scares me the most, and he trades equities predominantly. He goes, the thing that scares me the most is if he goes, I think in the next month or 2, and this is last month, he goes, I think in the next month or 2, we're going to start to see inflation prints that are out of control strong, like CPI that starts really spiking, and it's going to scare the crap out of the market. And I think that that's entirely possible in this environment, right?
And I mean, honestly, if we look at the U.S. economy overall, unemployment very good, growth very good. Inflation has been the only sticking point. I think also you can also argue that the quality of employment is getting a bit poorer compared to 10, 20, 30 years ago. But
sure.
Still
That's
overall,
a global trend.
That's
a global trend anyhow.
So far.
And that's a global trend. The worsening of the quality of jobs and the job market is a global trend, and it's something that's not, it's multifactored actually. So one way or another, obviously, it's not it's not something that we should like, but I don't think that should play so much of a role in the monetary policy, at least part.
Yeah.
Right.
No, and I don't think it will. They look at employment, regardless of the quality of work that's being done. So anyway, yeah, all great points. Hey guys, I'm sorry, I've got to step out.
Go ahead, Blake. We're here. Don't worry about it.
Okay, I want to wish you guys a great day, and remember, vote for us on the FX Street Awards. Steve will put the link in the chat box. It's only for a couple more days, and if you guys like what we do here, we got nominated as the best new contributor. So
best new contributor.
Yeah, if you can vote for us, that would be great, just to show us your appreciation.
Out of it.
What?
Dale, you sound a little bit far away.
I think they should take new out of the category.
Oh, we are new. We are a newcomer. So, and we're very, very proud to be selected as such. So thank you very much, guys. I'm gonna go ahead and let you go. But these guys will take care of you. So have a great trading day, everyone.
All right.
See you later, Blake. Bye bye.
Thanks.
Thanks for hanging
out. By the way, having to do with commodities, crude is also testing. We were looking at some of the indices being on the precipice of doing like a short-term bearish break to their bullish formations. Crude is also testing currently this ascending, steep ascending channels support. If we actually break down from there, the next support area is at 63.30 roughly. If we break down from there, I think that losses can really accelerate from that point on. On the other hand,
So
I have to say that, yeah, and as I said yesterday, keep in mind that positioning is extreme in crude. For every 12, we have 12 long positions for every short position. So as you understand, if it starts depreciating, the unraveling of that positioning on its own should be enough to create a sharp correction lower. On the other hand, gold and silver, the main metals that we're looking, are holding just fine. Silver is in an expanding triangle, so it's in a corrective formation, which is more correction in time than anything else. And gold, you know, suffered for a couple of days, but for the time being, it's finding support at the previous triangle here. So watch it here, because I actually closed all my gold quite earlier today, you know, because I don't see the reversal price action I wanted, and I took the opportunity of getting rid of it for just 0.2% cost, because I was looking for a sharper correction lower that would accelerate. I had to add, reduce, and you know, when it's not working your way, I managed to leave this market almost unscathed, and I did it. Even if it moves lower from there, I think I did the right thing, because as I said, both for silver and gold, I still don't see the price action that I would want. As you see, once again, for the time being, at least for now, we are seeing it hold this broken triangles resistance as support. And you know something, if the scenario that we see some risk aversion putting in the markets within the next few days, which is a decent scenario given the extreme strength we've had in risk during the whole month, that can help gold, at least in the short term. So precious metals holding just fine for now. Same applies with Aussie and Kiwi. They seem to be dipping lower, but look at them. I mean, on a daily closing basis, this is a Kiwi. On a daily closing basis, Kiwi has dipped below this horizontal trend line for the past 4 days in a row, and all 4 days it actually managed to close above it or just on top of it. So far, we're not seeing them, you know, give up. Same with Aussie here, if you see. I mean, we were sharply lower earlier. That's why I also like took half away from it, because I had added at the end of Friday, again, as I wrote in the chat room. So I managed to get out of a big chunk of it. I'm only keeping half a position because I had increased it to 1.5 times. I did that at no cost, but I do see the potential of another move higher from here to somewhere there, for example, before going lower. So, you know, commodity currencies and commodities, the vast majority of them are still holding just fine. I don't think that can continue for much longer, but they do okay. And both the cable, keep in mind, both the cable and the fiber, the euro, they both seem to be in short-term consolidations, like 3-4 day consolidations. And if we don't get a dollar reversal later today, both these formations seem to want to break out and resume to the upside, right? So be careful here, because as we said yesterday as well, there is still nothing bearish with the cable and the euro. Yeah, I mean, every time we see 2 or 3 days of moving lower, that doesn't mean that the bullish trend is breaking, right? I do believe, though, because you know, you have to keep time frames in mind. I do believe, though, and that's an opinion I'm not changing, that sooner or later we should see a sharp correction in the dollar, even if we didn't see the low on Friday, and even if we dip a little bit lower. I do believe that the reward to risk ratio in the short term, being short the dollar, doesn't make much sense, because yeah, the dollar can definitely move lower from here, but nothing moves in a straight line, and this very steep and fast depreciation cannot continue for much longer. And at some point, the market is going to move the opposite way, and when it does that, it's going to trigger a lot of stop losses, etc. And it can produce some rallies that might even in the short term look like impulsive. I doubt they're going to be in the medium term, but that means that you don't want to be positioned the other way with a bad reward to risk ratio in this occasion, right? Just mentioning that. Okay. We have an interview today. I heard you say before, right, Dale?
Yeah. Yes.
Okay, perfect. Abdul, I'm just reading your questions, but we have an interview. I will be more than glad to address them all tomorrow, mate. So thank you for writing in. We're always reading what you or everybody else is writing, and we will gladly address them tomorrow. Okay, Dale, enjoy the interview, my friend.
Thank you, Steve. Hope you're feeling better. And Stelios, please chime in a little more often. You have a lot to add to these daily webinars. And Blake, thank you for hanging out with us longer than usual. And guys, we have a great guest here. I'm going to make Krishna the presenter now. And you guys are going to learn a little bit about point and figure, which, is something W.D. Gann did. I mean, the old masters were a believer in point and figure. So, Krishna, thank you so much for joining us today in our FACE community.
Nice to be here, Dale. I just hope that I can put in a little bit of value addition and introduce you guys to the world of point and figure.
Okay, well, I guarantee it'll be great. So before we get to the X's and O's, why don't you tell us a little bit about your point and figure journey, for how it started, and perhaps what was your first job in the trading industry, and what brought you into it? Let us know what it was like at the beginning at point A.
Oh, that's a long journey. I will cut it short. I started off as an analyst with Financial Daily. This was way back in the late 1990s. I started off as a fundamental analyst, and then I developed interest in technical analysis. And my job was to put out a weekly forecast for the indices.
Okay.
And all along, I have been, I had this role of an analyst, wherein I had to put out my views on various stocks, and people, the readers used to ask a lot of questions saying that they hold shares of this company, that company, and they ask for my views. So I had to give them a concrete reply saying that they can hold on or maybe exit or stuff like that. Then for the last 4 or 5 years, I've been basically on my own trading for a living, and I trade primarily stocks. I buy it in the cash segment, not derivatives, and my holding period will be anywhere between a few weeks to maybe a few years. And of course, I also trade stock futures.
Okay.
So Nifty is very actively traded index future in India. So
okay. And where are you based in India?
Chennai. It's a southern coastal city.
Okay. All right. So let me ask you this: how was it for you when the cash was eliminated? Those notes were taken off the market. Did it affect your life or your family's life? And then we'll get to what you do.
No, not much. See, but people who had hoards of unaccounted money, they were the ones who had to do the running around. So for people having legal money, we had the option of depositing it in the bank, and there was more than 45 to 50 days time window given for everyone to deposit the money in the bank. So it did take a toll in terms of sudden cash crunch. And in India, it's not that every place accepts credit cards or stuff like that. So there are places where you have to necessarily deal with cash. So to that extent, it was cumbersome, but it was all manageable basically.
So it's been about a year or so. The country's adjusted to it.
Yeah, but now it's back to normalcy. In fact, after maybe a couple of months, things came back to normalcy. It didn't have a big impact at all.
Okay, so I think this was a test case for other democracies to try and eliminate black market. And although cryptocurrencies people think is another way to go, why don't we get right into it? Looks like you want to thank you for putting all this time into putting together a PowerPoint presentation. So I'm just going to let you take it away and interject if there's something that comes to a question from the community or something I would like to ask you. Okay.
Yeah, that's nice. Yep.
Okay. So Define Edge Solutions. That's the name of your website.
That is the name of the company that I'm associated with. So these guys have developed a software for charting point and figure charts. So it's a wonderful software. It has a very robust scanning feature and all that stuff. So and Define Edge is the website that you see on the bottom of the screen. That is the homepage, and Define Edge Solutions is the company.
Okay. All right.
Yeah.
Great. So why don't we move to start going through the slides that you
Sure. Yep. So as you know, the traditional chart, we have all along been looking at time being plotted in x-axis and price being plotted in y-axis, right? So depending upon what time frame chart you're looking at, so say it's a 15-minute chart. So every 15 minutes that goes by, you see a bar or a candle that gets printed on the chart, irrespective of what the price does. So the price might not move at all, but still, just because we have chosen a given time frame, we see the software faithfully plotting a new candle or a new bar after every 15 minutes or whatever time frame that we choose, isn't it? Right? So, but in point and figure charts, what we do is the x-axis does not define time. So we are just concerned with the price. So we try to focus on any price action that is significant. So what I mean by significant is,
no, I never thought about it. It's true, because you could be in one box for, several periods of time.
Exactly.
Yeah. Okay.
Exactly.
That's a pearl. Thank you.
Yeah.
Go ahead.
So in point and figure, we try to capture those price moves which are really significant. So what is significant is at the sole discretion of the user concerned. So he has the facility to tweak the parameter to capture the price action the way he wants. By increasing the parameter, he can make the choice less noisy, and by decreasing the parameter, he can make it more noisy. Right? So if you look at a point and figure chart, you will see alternating columns of X and O. So the X captures or represents price that is moving up. So the X will always move from your bottom of the screen to the top of the screen, because it captures a rising price, and the column of O denotes falling prices. So it will flow down from the top of the screen to the bottom of the screen. So you'll always have these alternating columns of X and O in any chart. So the basic idea here, the advantage with point and figure chart is that it filters out noise, and of course it gives more weightage to the trend. So if the price is moving up, and obviously we'll be in a column of X, so every incremental box size move that happens, it will be captured. But for it to flip over to a column of O, to capture a reversal, we need a bigger move on the opposite direction for it to flip over to a column of O. So
okay, so it takes a lot of price damage to flip the trend.
Exactly.
Got it.
So so I've just given an example here. Suppose if you're looking at a 10-point box size, so this box size is the variable which which the user can define. So by making it 10 points or reducing it, the noisiness of the chart can be altered. So if we choose a 10-point box size, so every 10-point move in the direction of the trend, it will keep the chart will keep plotting it. Any price move less than 10 points, it ignores it completely. And for it to capture a reversal, we need 3 times the box size to flip over to the other column to capture the reversal. So in this example, we are 10 into 3, we need a 30-point move in the opposite direction for us to capture a reversal and flip over to a column of X or O, depending upon what the trend is.
Okay, so it really keeps you in the trend, like I was saying.
Yeah, it's basically a trend following system, and the best part is if the trend is in force, there is no way that you're going to miss the trend. So that is one of the best parts of using point and figure.
Okay. So it really disciplines people to not, to stay with something that's working until you really get, you know, big confirmation that
Yeah.
it's not right to be long or short anymore.
And the best part, Dale, is it's very objective. So there is little room for discretion here, especially when you're dealing with derivatives. You need to be very precise with your entry, exit, stop loss, and the way you trail your stop loss and stuff like that. So point and figure gives you a complete package. It removes ambiguity, and you are pretty much in control.
Yeah,
So
it's,
if
it's mechanical.
yeah, it's mechanical. Yeah.
Without a lot of computer power being needed. It's like your own little
Correct.
algo, your prehistoric algorithm.
Exactly.
Nothing
and
new under the sun.
the best part is if you're someone who likes to pyramid your position, keep adding on as the price moves in your favor. There is scope for doing that as well in point and figure charts.
Okay.
And the other best part is whatever tool or method that you use for analysis, suppose if you're interested in using a Fibonacci retracement or whatever, rather than trying to second guess whether the price is going to reverse from a Fibonacci retracement level, what you can do is you do the analysis in the candlestick or bar chart and identify those levels, and then flip over to a point and figure chart and wait for the buy signal or the sell signal to happen at the predetermined level, and then initiate the trade.
Okay. Got it.
Right.
Got it.
So these are the basic buy and sell patterns. So as I told you, point and figure is just a breakout system. So when this X gets printed here, can you see my cursor moving around?
Yes. Got it. See it.
When this X gets printed, that is a buy signal. And similarly, when this O gets printed, that is the sell signal. So obviously, you know the value of this O, when it is going to occur, and at what price will that O get triggered. So you know beforehand when the sell or buy signal will be triggered. And once the buy signal is triggered, your stop loss is going to be a level where a sell signal will be triggered. So in this example, you buy here, your stop loss is going to be one box below this column of O, because that will trigger the sell signal, isn't it?
I see. I also notice on both of these examples that before you had a buy or a sell signal, the previous pattern was inside the first pattern. You know, conventional technicians would call that inside days, neutral action. So you get a lot of that in point figure too, that, you know, you could have a series of X and O's, and then it'll look like it might be reversing, and it stays inside that range before you get a signal.
Yeah, it is quite possible, but remember that a column of X or column of O typically captures a swing. It's not necessarily a day's price action.
Okay, right. Okay.
Right. So we are already factoring in a lot of noise, eliminating it. So if you see a congestion pattern happening or a triangle kind of a pattern happening in a point and figure chart, it's a far more significant development as opposed to a same pattern happening in a traditional candlestick or a bar chart.
Okay.
Right.
Yes.
So the software that we have, this is a screenshot from the software that we have developed. The software is called TradePoint. So it automatically draws a horizontal line where a buy or a sell signal gets triggered. So in this chart here, I'm just the software has identified the buy signals alone. So the horizontal.
I thought you were doing it by hand on an index card. Just kidding. That's how they used to do it. That's how they used to do it, you know. All right.
Exactly.
All right. So you've modernized it, you lazy guy.
Yes. In fact, it's totally modernized, and you can run a lot of scanners. You can do a lot of things.
Cool.
And it's such a pity that this wonderful charting method is not so very popular amongst traders.
Well, we're changing that today.
Yeah, hopefully, because I was personally struggling because in my earlier avatar I was very good at analysis, but when it came to the real world trading, it was a different ball game for me, because I was all along in the business of predicting prices, where it would go, and that was not helping me in making money in any way, because when I started trading for a living, I had to generate cash from the markets to sustain my livelihood. So that's when point and figure came in very handy because it was very objective, and there was little room for confusion, and it made life very simple for me and profitable too.
Glad it's working for you, and you know.
Yeah.
If it isn't
So
broke, don't fix it.
exactly. And the next slide will here we are just capturing the sell signals alone. So in the previous slide that I showed you, it automatically captured all buy signals, and this is this chart, the horizontal red line that you see is the level where sell signal was triggered.
Okay.
Right.
Yes.
So here, from a trading perspective, see, in both the charts that you see on the screen, we have a buy signal, right? So the buy signal happened here at the same level, basically, in both the charts. For all practical purposes, the buy signal happened at the same level. But obviously, we would be interested in the instrument that is on the left-hand side, primarily because the risk is lower. Your stop loss is going to be here if you take the buy signal in the first instrument, whereas in the second instrument on the right, though the buy is at the same level, your stop loss is way deeper.
Okay.
Right.
So do you pass on those trades?
It depends on your risk parameters. So obviously, you know that this is the maximum risk that you can afford in a trade. So you can probably adjust the position size accordingly, or pass the trade if you deal with only one lot or whatever. If it is not
you, in your experience of using this, what's your average R to R, risk reward, on taking this?
See, if I talk about individual stocks that I trade, the risk reward is very handsome. I can talk about, say, 1 to 6, 1 to 7, or even better.
Wow.
See, the best part is once the trade starts moving in your favor, you can aggressively trail your stop loss. So that is the best part.
Okay. Okay. So you trail it. Do you ever take partial profits during a trend?
That option is also there, but it's up to the individual concerned. So if you want to, we can automatically calculate high probability targets using point and figure. So if you want, you can take some money off the table when the target is hit, and then trail the remaining position.
Okay.
We'll take a look at Dow Jones and S&P with some targets, with the caveat that this is all educational, and I'm not trying to give out any recommendation or anything like that. I'm just sharing what I observed from a purely educational perspective.
Okay. Yes, we have that disclaimer. Okay.
Okay, great. So let's flip over to a few charts here.
Yeah,
I think
after the interview is over, give me your lawyer's name and mine will contact him. I'm just kidding. Don't worry about it.
So okay, let's take a look at maybe S&P 500. So
all right, I do have a question from the community, from Bomsey. You might know him. Some of your people followed you here. What is the difference between Renko charts and his software? As Renko charts are based on price rather than...
Okay, fine, excellent. Renko chart and point and figure, they have a lot of commonality. The basic difference is like in terms of trailing your stop loss, point and figure is far more robust. It gives you a very objective way to trail your stop loss, and also it gives you the facility to project targets. So that way it's very useful. And actually, see, if I want to plot a point and figure chart, for example, I'm just randomly picking some stock that's traded in India. So there are two parameters that I have to give to the software to plot it. One is the box size, and the other one is the reversal here. So if I make the reversal as 2, then it basically mimics your Renko chart. So the default popular setting is 3-box reversal, and the only variable that the user has to decide is the box size.
Okay.
So if I make the reversal as 2, I will basically be replicating a Renko chart.
Interesting, and great question. That was a great question.
So this is your S&P 500. What I've used here is a daily closing price, and I have used a box size of 5 points. So each X or O that you see on the screen, it represents 5 points. So and the moving average here, the thick black line that you see is the moving average that I've plotted. And this moving average is not the regular moving average that you see in the candlestick or bar chart, because we are not dealing with time here. As I told you in the beginning, we eliminate time in pointed figure charts. So
So
this moving
what
average.
would it take on this chart to get a sell signal? A bunch of O's, a bunch of O's. You're laughing. A bunch of O's under 2680. Is that what it
Yeah,
would take on this chart?
exactly. So,
Okay.
Sim,
So everyone, cover your shorts at 2680. All right, go ahead, buddy.
so this moving average that you see is a 10 column moving average. So we take the average price of the last 10 columns and we plot it. So whichever way you dice this chart, it's extremely bullish. So I don't even know why people think about shorting this market, unless of course of course you go to a lower time frame and if you have reasons to do so. In fact, if you can open up the intraday chart of S&P 500 in your trading view platform, we can take a look at the point and figure chart. That would be interesting.
Okay.
And of course, this is Dow Jones Industrial Average. The same thing. See, the target projected based on the consolidation that happened years and years ago. It projected a target of 27,700. We are sort of almost nearing the target now, isn't it?
Yeah.
And
The S&P overshot it, and the Dow didn't quite achieve it.
Yeah, in S&P we sort of achieved the targets, and probably we have nudged above it. But in Dow Jones Industrial Average, we are just sort of nearing the target. And
How
of course,
about NASDAQ? You look at NASDAQ too? Or just
unfortunately,
S&P?
no, unfortunately, I don't have data for Nasdaq. See, this software is for Indian market. So what I had to do was to import data from another site and make it compatible to this software. So I didn't take the effort to do it for Nasdaq.
All right.
Sorry about that.
That's okay.
But I can share the chart in Twitter. That's not a big deal. I'll tag you. So this is about it, Dale. If you can probably open a chart in TradingView, maybe S&P 500 intraday, we can take a look at it from a point and figure perspective, and let's see what it throws up.
You want me to do that?
Yeah, because I don't have access to intraday US market data. So
okay, so you want me to show my screen?
Yeah, please.
Oh, okay. This is first. Okay, so.
And in the meanwhile, let me just take you to our homepage, the Define It Solutions.
I can't show both at the same time. So if you could
see,
okay. I'm showing the S&P right now. What time frame you want? 1 hour?
No. Let's settle for 1 minute.
1 minute?
Yep. You'll be surprised to see how much of noise is filtered, okay, even when you're using. Yep. Okay. Let me just take over.
Okay. So you want the screen back now?
No. That's fine. Just make it point and figure.
I don't. Oh, is that?
No. Click on the candlestick icon there. So that I think will give you the options to.
Oh, point and figure.
Yep. Right. And. There
you go.
Okay, and make it say 0.5. Just double click on one of those X or O, and it will pop up that user setting option. Just make it. Just change the box size to 0.5 or something like that.
Why don't we go back to you being interviewed? Can you do anything with this? Because we have about 5 minutes left. of work, and I want you to be able to complete it. But you want me to change?
Just go to
I tell you what I'm
prop.
going to do. I'm going to go back to giving you the chart.
Okay.
Okay, and if there's anything that you really want to make you the presenter, because I want you to.
No, is it okay? Fine.
All right,
So
so we're at the end of your presentation here, anyway, right?
okay, so this is this is our homepage, and if anyone has any questions or whatever pertaining to point and figure, you can just tag me in Twitter. My Twitter handle is given there at TechTrail, and it's a wonderful tool, especially if you are someone who is interested in trend following. This will make your life much simpler.
Okay, so you have a subscriber base. Is that people subscribe to your training, or you have a
Yeah,
daily
we do.
newsletter? Do you have a trading room? What's your business model?
Actually, see, every one of us who is associated with this company, we typically trade our own funds, and over and above that, we sell the software. So we generate revenues by selling software. We also do a lot of training courses for traders who are struggling, and of course, we also have some kind of a chat room where we discuss trades and share trade ideas and stuff like that.
Okay. Well,
Yeah.
I tell you, I'm very glad that I reached out to you on Twitter, Krishna,
Yeah.
because I really think it's valuable. I know that it's antithesis to Gann, who believed time was more important than price, but
Correct.
I'm telling you that I used to see most floor guys using X's and O's in the pit,
Yeah.
and
Yeah.
they didn't drive away in a Ford Pinto.
Correct.
So it really was enlightening for us. And you're, like it or not, you're my trading warrior brother. And thank you for bringing a different methodology to our community. And I encourage people at the minimum to follow you on Twitter, and also check out your website.
Yep.
So may pips rain down on you and everyone your words touch over 2018. Good hunting to you, and thanks again, Krishna.
Thanks, Dale. Thanks for the opportunity. Enjoyed talking here. Thank you.
Yeah, it's good when we can laugh together too, right? Sometimes we take our lives and trading a little bit too seriously, and it's my belief trading is what we do. It's not who we are. And but thank you for opening a new world to many people that are either watching or will see this video.
Yep.
So thank you very much, Krishna.
Thank you.
Okay,
Thank you for
everyone,
the opportunity.
Okay,
Yep.
everyone, that's a wrap for Turnaround Tuesday. Good hunting the rest of the day. See everyone in the chat room. Don't forget to vote for ForexAnalytix on FX Street, best new contributor. And I'll see everyone tomorrow. I have Peter Goodburn coming. And Peter was crazy bullish last April, and I think we're at 2,200 or so. His targets were 2,760, so it's going to be interesting to see what Peter thinks. And S&P, the dollar, oil, gold, whatever's on his radar. So consider joining our group and taking a look at the traffic light page, at least a trial for $1. You could drive it around for 10 days and take a look at what happens after face closes in the chat room. And with that, remember everyone, don't just count your pips, count your blessings. Adios, my trading warrior brothers and sisters. See you Wednesday. You're very welcome. You're very welcome. Our pleasure. Our mission is to build up and edify traders every day. Hope we accomplished it again. Thanks again, Krishna.
Thanks. I'm signing out now.
Okay, buddy.